Hi, my name is Farhan Majid. I am part of Group 7. Today we are going to learn about the inventory analysis for Parsi on ES. This is our PPT. The group members we have is Sai, Raviteja, and Aditya. We were all part of a group who worked on this assignment. So let's start with the background and introduction. Background and introduction. Parsi Onias is in charge of the purchasing division, which is in charge of acquiring raw materials for the company's goods, which includes a brand new refrigerator line. Making precise financial estimates based on material costs is another of these duties, but there are now worries over forecast accuracy due to an inventory imbalance. Let's examine how the cost of goods sold and the adjustment procedure are affected by inventory transactions. RP forecast first purpose is reduce COG while increasing net income. The engineering team determined that each refrigerator includes 11.22 pounds of poly- polyurethane foam due to a mistake in the quantity of polyurethane. However, at the conclusion of the quarter, a physical inventory check revealed that $350,000 of polyurethane was missing. Each refrigerator seems to have used far more than 11.22 pounds in the manufacturing process. That was the background and introduction. Now let's go ahead in the inventory transaction. Inventory transactions directly impact the cost of goods sold (COGS). When raw materials are purchased, inventory increases while accounts payable also increases. Upon manufacturing and sale of products, inventory decreases and costs increases. This reflects the cost of materials consumed in production. The relationship between inventory transactions and cost of goods sold (COGS) can be explained using the formula: opening inventory plus purchases minus closing inventory is equals to cost of goods sold. Here is the table calculation where we can see the account debit and credit. So in the accounts we have inventory, cash, purchase of raw materials, and the debit and the credit. It's almost same, which is $300,000. Next, in the column, we can see cost of goods sales, cash, raw materials, and products sold. In that, the debit is $100,000 and the credit is $100,000 as well. Here we have another table which indicates the inventory, cash, purchase of raw materials, and the cost of goods sale. Cash is $300 as we saw seen in the account. Inventory is $100,000 and cost of goods sale is $100,000 as well. So now let's proceed to the adjusting entry, a which which states that a 350,000 credit to inventory and a 350,000 debit to cost of goods sold was the adjusting entry made as a result of the difference in the inventory count. This revision accounts for the overabundance of polyurethane foam that was consumed above preliminary projections. As a result, Parsi estimates for cost of goods sold was affected because it now accounts for the actual increase in production cost. By bringing the recorded expenses into line with the actual inventory count, the adjustment guarantees accuracy in financial reporting and guards against possible misrepresentation of the business financial performance. Which here we have a table which shows the account debit and credit. In that we have cost of goods sales, inventory, and adjustment to raw material. Cost of goods sales is debit which is $350,000. Inventory of credit is $350,000. The next table indicates the costs of goods sales inventory. Cost of goods sales, which is $350,000, and the inventory is also $350,000. Now, this is the last part of the PPT, which is the suggestions, or we can say conclusion. The engineering team's incorrect consumption estimates resulted in inaccurate the cost of goods sold in the financial accounts. Reviewing the raw material consumption estimates is crucial to getting a precise understanding of the actual amount used. Acquire more material consumption experts to prevent such forecasting errors in the future. Additionally, improving communication between purchasing and manufacturing departments can ensure accurate recording of material usage. Implementing stricter oversight and reconciliation processes can mitigate forecasting inaccuracies and enhance financial reporting reliability. This was our part of the PPT, which were of 5 slides. We have read conclusion. Thanks for listening.